This presentation will walk you through process costing and how to allocate the costs for these products. When we talk about process costing, it's good to review job order costing. Remember, job order costing is when we look at custom type products and we assign costs by job. In process costing, we're looking at products that are made more on an assembly line or that have constant demand and are continuously made. Things like baseball gloves or toilet paper or stuff that's made in a factory on an assembly line that meets that constant demand. Now remember, in process costing, we're looking at these products that are made continuously. And you can't really expect workers to finish every product that they start if their shift is over. So we need to look at how to assign costs to those partially completed units as well as those completed units. To assign costs in a process costing system, it's going to take 4 steps. In the first step, we look to determine the units that we have to assign costs to. We'll break this into 3 different groups: beginning inventory, started and completed, and ending inventory. In step 2, we'll compute our equivalent units. This is the process of taking those partially completed units and making them whole. Step 3 is to determine our cost per equivalent unit, looking at those costs that were incurred during the period and dividing that by our equivalent units. And finally, we will allocate our costs. We'll allocate those to the units that were transferred out as well as our ending inventory. In this chapter, we will review the weighted average method of computing equivalent units. In this method, we do not look at what is in the beginning inventory. We will take an average cost of what has been completed and transferred out, and also look at what is in the ending inventory. This is a 4-step process. In the first step, we account for the physical unit flow, which just means we're going to look at how many units we have and where they are at in the production. Typically given to us is the beginning balance that we started with, the units that we put into production during the period, and that will equal our total units to be accounted for. Once we have that information, we can conclude how many units were completed and transferred out, what is in our ending balance, and then that will also equal how many units we need to account for. But this allows us to separate these units into completed and transferred out and what is left in our ending balance, which is necessary to compute equivalent units. Here is an example of that step 1 process. Again, they're going to give us certain information, the beginning balance and how many units were transferred into production. And that tells us the total units to be accounted for. Here, that total amount would be 65,000. Also given to you would be either the left in the ending balance. Typically, they're going to give you that ending balance figure. So if they gave me the ending balance figure, and I know my total units to be accounted for were 65,000 because that has to agree, I can conclude that the number of units that were completed and transferred out must be 62,000. And that would be the end of step 1. In step 2 of this process, we compute the equivalent units. Equivalent units means how many whole units can we make out of all of these partially completed units. And there's 3 pieces to this puzzle. First, we're going to look at all of those completed and transferred out units. Those units are whole units and should be accounted for as such. We're going to separate this out into materials and conversion amounts because in this
second piece of this, the ending inventory is going to be multiplied by the percentage complete in each of these separate categories for material and conversion. Because products are typically done at a different pace, materials sometimes are added before, and conversion again is the direct labor and manufacturing overhead that might be completed more towards the end of the process. So each of these units in ending inventory might have a different percentage complete based on materials and conversion. Then what we're going to do is add those whole units to our materials amount to get our equivalent unit for materials, and we'll add that whole unit to our conversion amount to get a total equivalent unit for conversion. And remember, we're going to ignore the beginning inventory amounts. That's why we completed our step 1, so we can figure out what was completed and transferred and what is in our ending inventory.
Now, when we talk about equivalent units, what we're trying to do is look at what partially completed units, if I add up all of these together, how many whole units would I actually have? So in this example, they have 2 tables that are half done. So I would say that I have 2 equivalent units. So if I had 2 half glasses of water and I poured them together, I would have 1 full glass of water. And that's what we're looking at for equivalent units, is if I combined all my partially completed units, how many whole units would I have?
Here's an example of the step 2 process to compute equivalent units. Remember, in step 1, we make sure that our units to be accounted for agree, and we've separated our units into completed and transferred units and our work in process ending inventory. As you can see, in total, our equivalent units equal those units to be accounted for. So now we can move on to calculating our equivalent units for materials and for conversion. We're going to take that whole number for completed and transferred units, since these are whole units. It's the ending inventory that we're going to take the ending inventory amount and multiply it by the percent complete. So for materials, our ending inventory is 80% complete. So we're going to take that 15,000 units in ending inventory and multiply it by 80%. That's how we get that 12,000. Then we do the same thing for conversion. For conversion, our ending inventory is 40% complete. If we take our 15,000 times 40%, we would get 6,000. So to compute equivalent units, our materials would have an equivalent unit amount of 202,000, whereas our conversion would have an equivalent unit amount of 196,000.
Next, we can move on to step 3, which is to calculate the cost per equivalent unit. Again, to do this, we want to figure out what cost we had during this period and divide that by our equivalent units that we just figured out in step 2.
Therefore, in step 3, we're going to take the work in process beginning inventory cost amount and add that to any cost that we put into production during that period. That will give us our total cost during this period. We're going to divide that by our equivalent units that we just computed. We'll do this separately for materials and conversion. And that will give us a unit material cost and a unit conversion cost. If we add those 2 pieces together, it will tell us our total manufacturing cost per unit. Here, let's look at a separate example of step 3, where we're calculating our cost per equivalent unit. We've already determined our equivalent units. That was done in step 2. For materials, our equivalent units are 66,000. Our conversion equivalent units are 51,000. We would add up all the costs to be accounted for This is coming from our beginning inventory and whatever costs were put into production. For materials, that was $198,000. For conversion, it was $135,150. We just divide that by our equivalent units to get that cost per equivalent unit, done separately again for materials and for conversion. Then, if we need to, we can find our total manufacturing cost by adding these two costs per equivalent units together. Using our previous example, let's review step 4, which is to do a cost reconciliation schedule. What this is going to do is assign a cost to those completed and transferred out units, as well as the ending inventory for materials and the ending inventory for conversion. In total, our total cost should agree, taking the beginning inventory plus what we started into production to get those total costs. The total cost should agree. We're just trying to assign our cost to our specific units. So in step 3, we calculated our cost per equivalent unit to be $3 for material and $2.65 for conversion. That gave us a total manufacturing cost of $5.65. Since those completed and transferred out units are whole units, we can take the amount that we determined to be in that category and multiply it by that total manufacturing cost. So, since we have 46,000 in completed and transferred units, we multiply that by $5.65 to get a total of $259,900 to assign to our completed and transferred out units. Then we look at those ending inventory pieces. Materials has a 20,000 unit equivalent unit in its ending inventory. We multiply this by 3, since that's the cost per equivalent unit for materials, which gives us a total of 60,000. And then we do the same thing for conversion. We take that ending inventory in our equivalent units and multiply it by our conversion cost per equivalent unit. You'll notice our total costs equal our total cost that we started with to begin with. And that's your cost reconciliation schedule. And finally, we can't forget all these wonderful journal entries. The journal entries to record the cost incurred are the same as job order costing, so we will not review those. What I want to note for process costing is that costs are assigned by department. Each department will have a work in process. This is an asset account and therefore has a normal debit balance. So if we want to add raw materials to our work in process accounts, we would debit each department's work in process account and credit those raw materials. Same thing if we are assigning labor costs to a job, as well as manufacturing overhead. When we want to transfer from one department to another, we need to make sure we debit whatever department this work is going into, and we credit whatever department this work is coming out of. For example, if we are transferring from Department A to Department B, we want to increase Department B and decrease Department A with that credit. And finally, the same thing to assign those costs to finished goods. We would increase our finished goods account with a debit and decrease whatever department that is coming from.